Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. 3 green days in a row for the S&P 500. Holy moly, donut shop. Bears, are you guys okay? I really hope the Bears are okay. Bulls been getting their butt whooped for a while, but the last 3 days, Bulls been having a good time. Amazing. I hope you guys did well. I did not make a video yesterday because of Halloween, but on the video, my last video, the day before that when I did make a video, I talked to you guys about that 414 level. That 414 level, as a reminder, was the 50% fib level from all-time high down to October 2022 low. 414, and I mentioned to you guys, we got a false breakdown setup on that daily chart, which made me favor more upside. And then I mentioned to you guys bullish follow through would be the clear 417. I mentioned, I give a bull case and a bear case. I think I mentioned we don't want to get bearish unless 414 fails. Why? Because we had a false breakdown setup, the greatest trade setup of all time. Because like I said, I'm trying to get people to stop calling tops and bottoms and building a habit of calling false breakdowns and false breakouts. Okay, whenever you guys like the video and comment, that helps me share the video. It helps the algorithm out. So help me get the word out, guys. Like the video, subscribe to the channel, comment. I appreciate it. But yeah, the false breakdown setup of 414 led to another false breakdown setup of 417. Remember, this is a daily chart. We lost 417 and recaptured that on the daily chart, and it led to more upside. FOMC is going to get the credit that we got to bounce or whatever. I don't know. But for me, I know the truth. I know the truth. It was the price action that deserves the credit, giving us that beautiful trade setup, a trade setup that I have preached on this channel for so long, and it's a powerful trade setup that I want everyone that watches my video to learn. The false breakdown setup and the false breakout setup. Speaking of false breakdown and false breakout, here's the intraday chart. The 15-minute chart is what I use to trade. 15 to 30-minute chart. Sometime when the market's too noisy, I'll move up to a 30-minute chart. But 15 to 30-minute chart is what I use for day trading. And it was a very beautiful day. After recapturing the 414 fib level and the 417 fib level, this morning market decided to continue by clearing the 420 level. I had a level at 420. This was in the plan in my Discord. Okay, I gave a bull case and a bear case. So the bear case was if 418.5 and 417 failed, then, that would trigger shorts. The bull case was if 420 clears, rally continues. So that was our trigger to go long. When 420 cleared, I got into some calls, but I also confirmed it in my group that 420 cleared, put in 421.5 to the 422 zone in play. And look at that. Beautiful right there. 420 cleared on the 15-minute chart. And then it hit my target zone, level to level move. I even posted, I posted it right here. This was at 10:39, 10:30ish a.m. this morning Eastern time. 20%, I'll take it. I'm not looking for home runs, just some nice base hits. And I wrote here, just gonna relax and wait for FOMC now. Okay, I got my first level to level move in. I don't need a rush or anything. I wait for FOMC. So by the time we got to FOMC, I decided, okay, FOMC is going to be crazy. Let me move to a 30-minute chart, okay? So like I said, when the 15-minute chart gets noisy, I'll move up to a 30-minute chart, and that was what I was using to track FOMC. Now at 1:30 on the 30-minute chart, the 1:30 candle on the 30-minute chart at 1:30, excuse me, it cleared that 420 level, but I ignored that one. Why did I ignore that one? I ignored that 1:30 candle because it wasn't FOMC yet. However, at FOMC, it stayed above 420, okay? This was mentioned in my Discord. So far, 420 cleared in this support, and as long as it's above 422 is in play, and once again, no puts unless 420 fail for the false breakout setup. I needed 420 to fail on the 30-minute chart. As you guys can see, it never failed on the 30-minute chart. Stayed above 420. Now, what made this trade difficult? Because of all these wicks. Look at this wick. Dropped as low as 419.3-ish, 419. Made it very difficult. But look at why I moved up to a 30-minute chart. Look at that. Up, down, faking us out. 30-minute chart, though, look at how less noisy that was. Much less noise on a 30-minute chart. Now, like I said, why did I move to a 30-minute chart? Because we was going to go to deal with FOMC. I had to deal, the higher time frame would be safer. So, anyways, it did manage to pop up to my 423.5 level. And now it's stalling. Is there more upside incoming? One thing I do want to mention, goodness gracious. One thing I do want to mention, that a lot of time with these data days, they often set tops and bottoms. Just like the false breakout and the false breakdown, FOMC tends to set tops and bottoms as well. Look at back in September 20th. This was the last FOMC. And it was bearish that day, and it led to an incredible move to the downside. All right, the high of that day's candle was 444.44, and it dropped down to 420 before giving us a bounce heading, and that led to more lower levels, obviously. But the point is, FOMC in September 20th, it set a high, guys. And now here we are once again on FOMC, but this time last time it broke down, it was breaking down support levels from fib levels. This time it's clearing fib levels. All right, so we want to be careful. We want to stay unbiased because it's looking like it wants more upside, okay? But at the end of the day, price action is the shepherd. It doesn't matter what my opinion is or anyone's opinion. Price action has the final say. So check it out. Bull case and bear case coming up. And these are not predictions. These are just levels and scenarios to watch out for us to be able to react. The same way I show you how I react and trade on the 30 minutes or the 15-minute time frame. This is what I mean with the levels on the daily chart. Is it going to break out? Is it going to break down? So basically, what I mean is, for the bull case, if there is going to be more upside, 423.5 is first resistant. All right, it defended today, end of day, but if it clears tomorrow, more upside is possible. RSI is not in overbought territory, so that helps out the bull case. So 423.5 clears, 425, 426.5. I think there's a gap around there, and 428 are in play. All right, you want to look to long when resistant clears, especially if it's a false breakdown, because think about it, a false breakdown is a recapture of a lost level, but it's also a breakout of resistance. So that's something to watch out for. False breakdowns intraday, but overall, 423.5 needs to clear and 425 needs to clear to trigger more upside. If these levels clear, look to long. Now, if we want to get bearish, we get bearish when we get breakdowns of support, especially when it's rallying, because in order to get a breakdown of support, that would end up being a false breakout setup, okay? But obviously the false breakout setup would need to be official on the daily chart, because a lot of times you'll get false breakout setups intraday only for it to reverse and turn out to be a false breakdown setup. Does that make sense? So basically what I'm saying to you guys is we need a daily chart close below 422 and especially 420. That's a fib level to get bearish. Okay, remember what happened on Monday when we recaptured 414. We had a false breakdown setup on the daily chart, and that led to a decent move to the upside. This was definitely tradable. So if you want to get bearish and you want to favor more downside, you need the price action to confirm it and tell you, and that would come in the form of a false breakout setup on the daily chart. So like I said, we'll need 422 and 420 to fail, and that would put lower targets in play. 418.5, 417, 414.5, and then 414. And below that, I got 412 and 410. All right. I know I'm saying a lot. I know I'm mentioning a lot of levels, but I don't know, maybe slow the video down if you need to or rewatch it. But the point is, we're overall bullish above 420 because that was the last level, the last big fib level that was recaptured on the daily chart. Follow through would be to clear 423.5. That would break out my resistance level, trigger longs, and put more upside in play. All right. Best time to get bearish is when we lose the support. Loss of 420 would be the trigger to go short because that's the big level that was recaptured today. So if that's lost, that will be a false breakout setup, and then we could favor more downside. All right. So I hope that made sense. I said it 2 times. I don't mean to be repetitive. I know some people find that annoying, but I just want to make sure you guys get it, okay?
It's fucking ingenious, if I understand it correctly. It's a Swiss fucking watch.
That's right, dude. The beauty of this is its simplicity. Once a plan gets too complex, everything can go wrong.
Triple Q cleared that 354.7 level. That was a fib level. Now flirting around the 357 level. All right. As long as above 354.7, this breakout stays intact. That's even a false breakdown setup. It stays intact. And that would put more upside in play. If 357 clears, 359, 360.3, 362, 364, and 365.5 plus in play. But it would need to stay above 354.7 and clear 357 and 359 to trigger more upside. If we want to get bearish, we need a false breakout setup. That would mean 354.7 needs to fail to put lower targets back in play. All right, 353, 351, 349, and 347 below. Those are targets. We play it level to level and leave runners. IWM is trying to bounce. Didn't quite clear one of my critical resistant levels yet, but is at 165.7. If it can do it tomorrow, 167.5, 169, and gap fill at 171.5 would be in play. All right? Support is at 164 and 162.5. If these levels fail, 160 incoming. All right? Tesla trying to bounce, and it did recapture my 1.618 fib level at 204.5. Guys, as long as above that level, that false breakdown setup stays intact. That's bullish. Follow through would be to clear some more resistant levels. 206, 208, 210, and 211.4. If 211.4 clears as well, that's extremely bullish. All right? 213, 215, 217, and 218.3 would be targets up above. All right? So stay bullish above 204.5. And if you want to get bearish, it needs to break back below 204.5. That would put 203, 201.5, 200, 198, 196, and 194.6 all back in play. Apple. I have this wedge pattern here. It managed to recapture the 170 level. It led to more upside coming and rejecting right at my 175 level. I think that's a level I gave you guys. Hopefully you added to the chart. Follow through tomorrow. If it's bullish, it needs to clear 175 and it can possibly fill this wedge pattern out to the upside. All right. Resistant level for the wedge is at 178.5. If 178.5 clears, a bottom is likely in for Apple, guys. Okay. Now to be bearish, 175 must defend as resistant, so it can't get above 175. If it does, it's bullish. But if it stays below, bears have a chance. But follow through is needed. 173, 170, 1.5 and 170 are support levels. If those levels fail, that is the bearish follow through. Look to short with 167.6, 165.7, and support of the wedge is at 163.7. All right. NVDA, what a monster start. This is a 6-hour chart. NVDA today managed to clear, recapture a fib level at 418.4. That's a 61.8 fib level. Overall bullish above that level, okay? Now, immediate support is at 425.5, 424, 422.5, 420, and then we'll get to that 418.5 level. All right? If we're going to short, those levels must fail. And if we're going to be bear bias, it needs to get back below 418.5. All right? Now, if it wants more follow through, the next resistance is at 428 and 430. If those levels clear, guys, we're likely getting more upside. 433, 434.5, possibly even all the way up to 440. All right? Maybe even higher than 440, actually. But point is, it needs to clear 430 tomorrow to trigger more upside. All right? Google's trying to bounce. It recaptured 126.6. Resisted. Now it's at 128 and 129.5. All right? Bears need to step up there, especially at 129.5. If those levels clear, it's bullish. 131, 132.8, and 134.8 are all in play. We want to get bearish when we get a false breakout setup. So that means 126.6 must fail to put 124.3, 122.6, and 121 back in play, guys. AMD, what a squeeze. Anyone long the AMD? Amazing. So it ran right into this yellow trend line that I have here. This is the third test. Started back on June 13th. Got a second test at October 12th. And now, today, a new month, got the third test, okay? Overall bullish above 107.4. Resistant is at 109.2. Bottom is likely in if 109.2 clears tomorrow, putting 112, 114, and 116 in play. Probably higher. You know, we'll go up, maybe pull back, go up. But it's likely a bottom is in if 109.2 clears tomorrow. If you want to get bearish and you want, trust this rejection only when support fails. 106.5, 105, and 103 are supports. So if we get a rejection, trust it more if we lose those support levels that I mentioned. Look to short. That'll put 101.5, 99.5, 98, 96, and 94.5 all back in play, guys. All right, let's end this with the option flow. 418.3, it got the most dark pool levels at 1.3 premium. All right, stay bullish above it, bearish if it drop back below. SPY filter for 500K premiums or above. Come on, Cheddar Flow work. It's bearish. Despite the pop up today, SPY is bearish on the flows. QQQ is bullish on the flow. So we got a divergence, okay? Not very helpful. IWM is bullish, so maybe that'll help, I guess. Yeah, QQQ and IWM is not agreeing with SPY right now. At least the big money that's trading them. Tesla is bearish. Apple is bearish. NVDA, bullish. Not too bullish, but it's bullish. GOOG, bullish. And AMD. What you guys think? Bullish or bearish? AMD. Oh, it's bullish, guys. All right, guys. Thank you guys so much for watching. If you want more content from Uncle Charters and learn to master the cheap style way of trading, definitely consider joining the Discord. All right. Other than that, have a great evening. Peace.